Are you or someone you know looking to buy or sell a home? When you use a HomeGain Realtor to buy or sell a home, you can get $150. Visit HomeGain.com and click on the Promo 150 banner at the top of the page to get started. Compare HomeGain Realtors and choose your favorite. Complete your home purchase or sale transaction with a HomeGain Realtor, and HomeGain will pay you $150. Get started today by going to HomeGain.com. Thank you for listening, and we'll be back from the break soon. Are you buying or selling a home? Having a realtor can make buying or selling real estate much easier. HomeGain can recommend and connect you with a top real estate agent in your area. Call 866-512-7918 or visit HomeGain.com. Did you know, according to a HomeGain nationwide survey, that having a realtor working for you improves your chances by 50% of getting your home sold? HomeGain can recommend and connect you with the top real estate agent in your area. Call 866-512-7918 or visit HomeGain.com.
You're listening to Real Estate Radio Washington, D.C. Metro with local expert Ryan Sloper. Now, here is Ryan.
Welcome back, Washington, D.C. Metro, to Ryan Sloper's Real Estate Radio. Today I'm joined by Louis Cammarosano, the general manager of HomeGain. Quick reminder, Real Estate Radio is designed to build the Washington, D.C. Metro's market by giving you good free advice. If you ever have any questions, concerns, or real estate needs, the best number to reach out to us is 877-245-2030. That's 877-245-2030. So I want to jump in to real-time real estate, where we kind of discuss what's going on in the market. One of the big questions is not only, is it time to buy a house now with the low interest rates, which we've been advocating for the past couple months, and to also protect yourself from future inflation. But a lot of people, tend to listen to the media and what they're saying, but I feel that one of the good ways to do it is to look at all the different surveys that are out there. I know, Louis, you do a survey quarterly, I believe, within every region. The Gallup polls showed that 69% of Americans think that it's a good time to buy. Fannie Mae's National Housing Survey reported that Americans believe that homeownership is the investment with the most potential. And the Pew Research Center said that 81% agree that buying a home is the best long-term investment a person can make. What is your survey concluding? Is it similar along those lines, or those numbers seem high to you?
They seem a bit high because our survey is of real estate agents and homeowners, and we do it nationwide, and then we also slice and dice the data by state. Nationwide, the general consensus is amongst real estate agents is that prices will remain the same or decrease. Very few are predicting an increase. The homeowners are slightly more optimistic only because they probably need to be. And then also in the D.C. area, there is more optimism on where prices should go. But as you and I talked about, buying a home it shouldn't be based on national sentiment. It really needs to be based on local sentiment and also the particulars of the property you're buying, whether your mortgage payments are basically around the equivalent of what you can rent the place for. I think most people they take the general advice that a house is a good investment, and that may or may not be the case. And as you always mention on your show, you need trusted advice to talk about what type of financing you're going to get and making sure that you're getting the right house for the right price. Yeah. But I wouldn't say that the general sentiment is you should go out and buy a house right now.
Right.
There are many instances, and there's millions of examples where buying a home makes sense. And there's also millions of examples where it doesn't.
877-245-2030. That's 877-245-2030. If you are currently, trying to weigh your options and figure out what the best thing would be, I know a lot of people have been out there thinking, is now the time to make a move where, I upgrade my house. Let's say they're in a townhome or condominium and they're looking to, buy into a single-family residence. Or they're just in one area and they'd love to make that jump to a more desirable area that they've always, envisioned themselves living with their family. I would say that now is the time to do that. Just purely, if you have the money saved up for a down payment, if you're making enough income to support that mortgage payment, you're not really strapping yourself. I mean, one of the things, the advice that I give to you guys is that just because, your pay stubs and tax returns show that you can qualify for a certain loan does not mean that you are going to be comfortable once you get into that loan. I think that this is one of the biggest, misconceptions, that just because, you get approved for a loan means that you're going to be able to get in there, afford the utilities fine, have food money, gas money, furnish the place. I can't tell you within the last 3 or 4 years how many people that I've talked to after the fact. I didn't handle their first transaction, but I started looking at the numbers, and I'm like, yeah, well, you got qualified for a loan with a 54% debt-to-income ratio. And for those of you who don't know what that is, they take your mortgage payment along with all of your other debts that show on your credit report, and they divide that into your gross monthly income. If that number is over 50%, chances are you're not going to have much room unless you have a ton of money saved up in the bank. And I actually think that this is one of the biggest reasons why we had so many mortgage defaults, was because that the ratios were being allowed to be pushed out so far. And you actually combine that with the either no down payment or low down payments. I mean, these loans were set up to fail from the beginning.
Right, and the mortgage brokers were saying buy as much, and real estate agents, buy as much home as you possibly can afford.
Yep. And
because it's going up. Exactly.
And now it's more of, interest rates are low. I think that, the prices, at least in the Washington, D.C. metro area, have been trending upward. But, they're still reasonable. I think that, somebody can make that move up maybe $100,000 in price to get what they really want. But they still need to make sure that they're comfortable ratio-wise. I always tell people to try to stay, don't take it over like 43 to 45% of your gross income, because you have so many things that go unaccounted for, especially when you're moving from a townhome to a single-family home.
Well, Ryan, I would advise looking at purchasing a home similar to a consumer item. You may look good in the $1,000 suit that the salesperson is selling you, and you may have $1,000 to buy it. The question is, do you really want that suit? And if you pay the $1,000, are you willing to forego something else? But you don't count on the suit appreciating, and you really shouldn't count on the home appreciating either.
Right.
You need to be able to make your payments based on the house is going to be perhaps static. So what people do is they factor in appreciation into the home. And that's a mistake. That's just speculating on a place where you're living.
Well, and I can tell you another thing that people factor in, which has not been the case, is rising incomes.
Sure.
They think that, let's go ahead and take a 5-year ARM so we can get the lower interest rate, let's say, 3.5%.
Right. Everyone's Warren Buffett. Their investments are going to go up.
Right. And then that's just not the case. And I mean, you really have to make sure that when you sit down to sign this $200,000, $300,000, $400,000, $500,000, $600,000 loan, that you are taking the loan out based upon where you are right now financially. Don't try to forecast out 5-10 years down the road that you've hit the lottery. Your 401k is shooting through the roof, because I think a lot of that's a lot of what people do, is that you try to look at things positively, and then we go through one of them bust cycles that we just went through and realize that you've lost everything, and then it puts a bad taste in everybody's mouth.
Well, a safer speculation might be to say, I'll take out a 30-year loan with the understanding that you might be correct in saying that interest rates are going to be much higher in the coming years, and therefore you're going to be actually holding on to a good mortgage where you're only paying back in lower interest rates. And you can also perhaps presume that if interest rates do rise and inflation rises, that your salary, unless you have stagflation, will increase somewhat, so that the amount of money that you're paying 5-6 years from now at that low interest rate is fairly comfortable based on your income, your inflated income.
Sure. You're listening to Real Estate Radio. I'm your host, Ryan Sloper, joined by Louis Cammarosano, General Manager of HomeGain. We're discussing whether now is the time to move up. And, I think...
Ryan, I would just also add, though, we've been... There's an old saying that markets are rational, but they can stay irrational longer than you can stay solvent. We've been saying interest rates are going to go up. They're going to go up, and they haven't gone up.
I know. Yeah.
So but even that strategy of saying, look, it's okay, I'll pay the price I'm going to pay now because interest rates are going to go up, and if they don't go up, then you may have made a wrong decision again.
Yeah, and that's why I just try to tell everybody to make a decision from where we're at right now today. Don't try to predict, because we don't have the crystal ball. I mean, we can say what we think they're going to do. With the government manipulation, a lot of things can happen.
We've been surprised at how long they've managed to keep the interest rates down.
I'm absolutely amazed with everything that's taking place, that they've stayed the way they have.
We're talking about the debt ceiling getting broken, where we're still having these low interest rates.
But I think one of the biggest factors is, Louis, is that there hasn't been really another currency that's really stepped up to the plate and made itself become where other countries are going to look and say, we need to tie oil to that currency. It seems like every time we look and we think that the dollar is going to fall off the map, it then just makes a little bit of a comeback. Have you noticed that? So I think that ultimately, when these countries really stop buying our debt, not to the levels where we're at right now, but down the road, I think that there is going to be another player that steps up. I just don't know how long that's going to be.
Well, I read that Zimbabwe, I don't know if they went through a hyperinflationary period a couple of years ago. They want to go to a gold standard, so maybe they'll set the standard going forward.
Well, you know what? It could be better than what we have going on here. At least it has some sort of tangible value to it, unlike the dollar.
Well, it's interesting. The reason you have these issues is none of the currencies are backed by anything other than the full faith and credit of the issuing sovereign.
Yes. And, I mean, we've talked about it numerous times. Most people are not aware that there has never been one fiat currency in the history of man that has ever not become extinct at some point, you know? And it tends to evolve or change. And that's why I think there's so much manipulation of our dollar right now that something has to give at some point. And it's how long can we push it to kick the can down the road. Like Geithner was saying that through loopholes, he can push this back into August. You know what I mean?
Think about it. Why would loopholes give you any confidence in the value of the dollar if the government has to rely on loopholes to make its payments?
Well, you know, I've been trying to figure this out for a while, too, and most of the time, you know, the markets are forward-looking. So shouldn't this be a bad sign? Shouldn't everybody be pulling their money out of the stock market?
Well, you know the guy, who was it, Bill Gross at PIMCO, he pulled all of his money out of U.S. Treasuries.
I know, I saw that, which is a clear indicator to me.
But didn't seem to have any impact on interest rates.
I know.
It seems somebody else bought whatever he sold.
It seems like they're putting a lot of stock in every time the Fed, you know, the blah, 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 whatever they say in their meetings, and really just saying, oh, you know, Bernanke's going to figure this out. That's more or less the only thing that makes sense to me.
Well, that doesn't make sense based on prior history because he hasn't figured out anything in the past.
Well, I agree. I just think that they're going to ride this train out as long as they're going to kick the can down the road, and hopefully they can guess when the best time to jump off the train is. You know,
there's really no alternatives because if interest rates are low, you can't put your money in the bank because you won't get any interest, so you throw it into the stock market.
Yeah.
And that's really what's happening. They're keeping the stock market high. Now, it will be very interesting to see. In June, you're going to have, those two events. You have the debt ceiling issue, and you have the end of QE2.
We're coming up. Yeah, we're coming up on a break, Lewis. I don't want to cut you off, but would you mind? I appreciate you coming on again today. Do you want to plug HomeGain real quick before we jump into the break?
Oh, sure. Always willing to do that. HomeGain is the place to go to find a realtor, get the value of your home, review home prices. We have a special going on right now. You can go to HomeGain.com, and you can get $150 if you use one of our real estate agents to close or buy a home. So you can go to HomeGain.com, please. Thank you.
Awesome. Thank you, Lewis. You're listening to Real Estate Radio. Stay right there.